Wagwan YouTube. It's Niger's finest. Saucy Day, aka David Tickholm. No, it's the other way around. David Tickholm, aka Saucy Day, back with another Road to Six Figures video. Yes, another one. Another great one. It's been a lot of great changes that's been going on in the trading universe. I said trading universe and the trading niche. That I don't think this is the video for that, but yeah, a lot of good changes is happening. Things are happening in the US. Good or bad is relative to your perspective. So let's start. Euro USD Monday, February 19th. Okay. So off the hour, this was my off the hour around 8 a.m. I had I'm gonna show you the trade that I took, but off the hour we had 200 floating on the bottom. But I'm starting to realize the 50 EMA really holds, and when the 50 and the 200 are in confluence together, you don't want to trade against that. Like, you don't want to trade against that at all. What I saw right on this one was, once again, came back to a supply area. We had a 50 and a 13 SMA floating at the top. Off the 5-minute, I seen we had a regular 5-minute move. It wasn't too crazy, and when I took this, I seen that we also had the 200 over the top, which was more confluence. We had a breakage structure, and yeah, those were my two main confluences for this. I knew it could have failed, but what made me confident taking this is once we got the break of candle, it did shoot off. It didn't really like linger in this area, as you can see, which is what you want to see. It tapped the zone. It just wicked it and stayed in the zone. Like this candle, the body of the candle wasn't in the zone, which was another confluence. So I sold here, and what you always have to pay attention to when you're in live market is what is it gonna do when it touches the 50? Because right here, when let me actually like bring this up. This is why this is important. Right here. Oh my gosh. Yes, let me just delete this real quick. Right here where it was touching like right here, you see the wicks? It was ranging in here for some time. So it was bouncing off the 50. And you know, we got a good candle break. A good body candle. But this was very important right here, because this could have easily shot up and then went against us and knocked us out. That's why it's always important to pay attention to live price action. You might have a certain bias, but you got to understand the market. In the market, anything can happen, even with your edge, even with your strategy. So you always want to be able to cut when you need to, and you want to be able to hold for the most, like for large amounts of profitability. And that's something that you genuinely will just get better at with price action. But that's why I use your edges to know, okay, when do I leave, or like how long should I leave my runner, or when should I cut my losses? You got to pay attention to live price action and when it's showing you the information. So with this one, let me bring it back. That was really the catch. I'm not gonna lie. Don't mind that. I'm not gonna lie. It's probably the last time you guys gonna see me really trade EU, unless miraculously like GU and Nas is just not throwing any type of moves. Like, it's really bad. But I think for now I'm gonna go down to just GU, Nas. I might add another third pair, but I don't know. I noticed I just don't really trade EU as much as usually GU and Nas that I'm getting like my moves on. So still a great catch, you know what I'm saying? Still caught that move. Great catch. It hit my 1-to-1. Left a little runner and made great profit on that one. The other trade I took was a Nas move, right? So off the hour, we see the 200 is over the top, which means, like, as we can see, it's trending low. That's what the indicators show us. The 50 EMA is touching that bottom wick, but that's not really that too much of a problem. Yeah, with this one, I'm gonna tell you exactly what my mindset was, even though it ended up even going farther and smacking TP, right? So I put this as a liquidity grab from all the way back here. So you can see the 5 minute, we had the 200 over the top. I mean the 15 minute, my bad. And in the 5 minute, as we can see, I put this as a liquidity grab from all the way back here. I know you're probably like, whoa, that's a very, very far. But yeah, I seen that it did a liquidity grab that. It was very high. This was around right after New York Open. I had seen it's been trending up. Seen the order flow down. But why I finished break even is I seen it touch the 50 EMA right here. And what usually happens is once it touches the 50 EMA, it explodes off. But happened to touch it, came a little to the negative. I think what I should have waited on to see was if it broke. If it break right here, then this is my indication to get out. Like right here, these 2 wicks, that should have been my indication. But I was a little too rash. I got out still in profit, still made something, but it was barely anything, and ended up dropping, like as we can see. Ended up dropping, and what ended up being like a 0.55 RR could have easily had been a if I really held at max. Almost a 2 RR. That's if I really was holding, but I probably wouldn't have held that. Probably would have held to like 150 RR, like right here, 1.5 RR. That would have been cool. But this is where getting better with just like looking at live price action and seeing what it's telling you, and knowing where to cut off. I just seen it moving backwards, and I seen that it tapped the 50, but tapped the 50, came up a little bit, and then it broke right past it. It touched right here to 50, and then it exploded down. So I definitely learned from that one. Those are my trades on Monday. Went 2-0. My trade on Tuesday was, let's go to JU. 200, as we can see, is cutting straight through, which is telling us that, as we can see, it's just creating orders. It's stuck in a range. Like there's no clear buy or sell. It's like ranging in this area, as we can see. It just exploded and broke to the top, right? So boom, we had that. Let's take it back a little bit further. Same thing on the 15-minute. 200 going straight through. Whenever 200 is going straight through, we have to get in our minds that we don't want to be trading supply and demand too much. We want to focus more on liquidity grabs. However, this one, God being the glory, still ended up working, even though it was a counter trend trade too. But I just couldn't help seeing this clear like order flow that needed to be filled, right? So I watched it, and I took the break of candle. Although it finished in the zone, I took the break of candle. I had, seeing all these indicators against me, that was also another thing. And knowing that it was bullish was another thing too, where it was like, that's why I only held it literally for, I'm not gonna lie, I held it for a 1-1, but I left a runner. And as we can see, it went for, no, I held it for 2 RR because it was such a short trade. The zone was only like 3 pips. Like my stop loss was only 3 pips, and 3 pips wasn't really anything for me. Like I need at least 4 or 5 or more. 4 or 5 or more, you know what I'm saying? So I doubled it up, went for 6 and smacked, and I got right out. And as we can see, I don't know if you noticed, but it did like a small liquidity grab right here, touched the 50, broke, and exploded off. Ooh, that was different. So I won my first trade, and let's go to Nas 100. Tuesday we had the 200 flown on top, indicating that it's selling. 200 on over the top. Remember, top when you have this white line, the 200 EMA, that's an indication of sales. You also want to always look at structure. As we can see, structure showing us is coming down, and then that was good to see too. As you can see, gave a liquidity grab on the 15 minute. Now let's go to the 5 minute. 5 minute did an amazing liquidity grab too at New York Open. Touched the 200, touched the 50. It's a clear indication of where price was going. Could have caught this. I'm not gonna lie, this would have been a great move to catch because it was after New York Open. It was towards my edge, but I wasn't paying attention to that. And yeah, I had took a 5 and 15 minute demand counter trend trade from way back here, and it was very an aggressive move. I had no business taking this. I got in right here because once again, me overestimating or me thinking that like I can one up the market, get ahead of the trend. I jumped to a conclusion, got in right here when I had no business, when I had all these indications, liquidity grab, right? EMAs flowing on top on every time frame, on the 1 hour, on the 15 minute, and on the 5. And I didn't even get a break of candle to really support this. Like if I'm gonna take any type of counter trend trade, there has to be a break of candle. And I didn't even look for the break of candle. I really just, I had no business taking this. So this was a loss that I just had coming. I wasn't really too upset because I was like, dang, I knew I had no business taking that. I could have been a little bit more patient, waited to see another like setup. And if the setup never happened, then boom, another liquidity grab. If the setup didn't happen, then this wasn't a liquidity grab, but if a setup never happened, then I just leave it be. There's no reason to force something that isn't there, you know? And that's what I gotta get in my head. It's like, if you don't see it, don't take it. We are not getting in aggressive when there was no like, it was like I said, there was a 15 and 5 minute demand zone from prior, but they were like, seeing it now, it wasn't enough for me to getting super aggressive, you know what I'm saying, ahead of time without even seeing like another indication of a break a candle or something like that. But it is what it is, you know what I'm saying. This is why you have proper risk management and you have your trading plan. So that was I broke even on that day with a win and a loss. Now we're gonna head to Wednesday 21st. Still Nas. So Nas 21st Wednesday, 200 phone on top selling. As we can see with structure 200 on top. This wasn't we had a 1 hour high probability demand. There was no real 15 minute. I mean, we can count this, but it was low probability demand. And I just took, there was a 5 minute demand as we can see too, but it liquidity grabbed right here. So I entered on the liquidity grab, got in, seen that the 50 was right here, but I was like, it's alright, man. Like, I have multiple time frames working in my favor, even if the indications are opposite my direction. Got in. This is where you got it. This is the candle you got to be patient on. You got to let it come back a little bit. Came, did a liquidity grab, and then just smacked. Got out. Easy. 1, 2, 3. So I took my first win. Took a GU trade. On Wednesday. 200 on the bottom. So indication of buying. 200 on the bottom, indication of buying. There was really nothing like I took on the 15. This was really a 5 minute move. High probability supply. We got to break a structure. It just happened like it tapped the zone. As we can see, it still ended up going. It grabbed the liquidity. It literally just went back into the zone again. And I think it was because the 200 was cutting through that it happened like this. It happens, but it literally gave me the breaker structure. I mean, it gave me the breaker candle. Took it, came a little bit in profit, and it floated back. Could have cut my losses right here, but I seen that it touched the 50 SMA, so that was also why I decided in live market to stay in it. Boom, it went stop me out, but I only take 2 trades a day, so I stopped right there. However, let's say I didn't take that Nas trade, literally right here, it never broke the zone. Remember, if it never breaks the zone, the trade, it's still active. Like, you can still get, if it gives you another break of candle, you can still take that. And as we see, give us another break of candle right here, and this could have easily been like a 1-3, 1-4 RR. But listen, it happens. It happens, you know what I'm saying? But this is why I'm showing you that yes, you may get more moves, but you got to follow your trading plan, because your trading plan is going to make you consistent. And when you build that trust with yourself, when you're having bad days in the market or good days in the market, you're going to be the constant denominator. The market is not going to be the constant denominator, because anything can happen in the market. There could be days where your pairs aren't moving the way you want to move it, like aren't moving the way you want it to move, you know what I'm saying? So that's where you have to use like discernment and decision making and follow your strategy to a T, to still be able to extract profits, to still be able to like get your RRs, create your edge in the market, and get out. You know, when the market is inconsistent, we're the ones that are consistent. So low Jim there, low Jim. So that was my trades on Wednesday. Thursday I traded nothing but Nas 100. Thursday I took 2 trades. This was the trades. We had the 200 coming on the bottom. We could clearly see the order flow. Hold on, we had the 200 coming on the bottom. Let me cut this back. 15 minute, we had the 200 on the bottom. Clear indication of that we're uptrending. This was really a this one was a 5-minute move that I took. I tried to get in on a quick liquidity grab that I peeped. It grabbed all this liquidity right here that I thought was gonna explode, and I could catch up 1-to-1. But I said, caught the breaker structure. I mean, keep saying breaker structure, break a candle, came back up, and it just went against me. So that was a loss. And then once again, I seen the 50 13 SMA in my favor. I know the 200 on the bottom. Use this whole 5-minute demand area. I seen that it tapped, and I see that it broke. Candle break, and it ended up smacking, but I broke even once I seen it start coming down, like right here. This is all on me, because this is when I have to have discernment to like be able to like I said, read price action. If it had broken past this wick and through this 50, then I could have just chopped off my loss respectfully. That's why we have risk management, to be able to take the loss. But because I was so quick to cover break even, I missed out on easily that could have been at least a 2 RR. You know what I'm saying? And although like these wicks, when you're in live price, you're like, these wicks be playing, but as we can see, it touched the 50 SMA, right? It touched the 50 SMA right here, and then boom, it took off. So it's all a learning lesson, man. It's just being better in live price action when you're in your trade, of knowing, yeah, there's no way this is a losing trade. Just get out, or let me hold this. Like, I think it's playing, but it's getting ready to shoot off. And as we can see, what happened, the market does what the market wants to do. So now let's go to Friday to finish it off. So Friday, I literally only just took 1 trade. As you can see, we had a 1 hour low probability zone. 200 on the bottom. On both time frames, we're uptrending. And as you can see, we had all these demand zones. Let's go to the 5 minute. It was at all-time highs. It's February 23rd. My indication for taking this, yeah, the 50 SMA definitely holds. My decision for taking this, I know although it's high, was that past New York Open, it came into a 1 hour. It tapped the it tapped the 15 minute. No, I took this zone right here. It tapped the 5 minute demand, and my indication was, what I probably should have done is, once I seen it like leaving this far up already, could have entered a little aggressive, since the my stop loss would have been very small, and I seen the 200s right there already. This would have been an instant take profit smacked. However, waited for the break of candle, got on the break of candle, and one candle literally just pushed down, and I lost the trade. And it like resisted at the 50 SMA. That's what I'm saying. It's like the 50 SMA will really, like, it can either make or break your trades. You know what I'm saying? Like, it's a strong indication to pay attention to in live price action. Like with one of my other trades, as you can see, like, it didn't really like do anything to it. So you just have to see how it reacts at the 50 SMA. With that being said, this week was, I would call it a loss because my risk management could be better. 5 wins and 4 losses. So it was still a winning week, but due to the fact that like my risk management could be better in my trades, like what lot sizes I'm using when I'm using them, and where I'm like how long I'm holding my take profits, because I was cutting my profits off a little bit when I could have held them. I caught a couple break evens that could have been, like, mind you, I put the 5 wins because it's like some of them are break even but still made profit, but those break evens could have been, you know what I'm saying, 2 RR, 3 RR. So just being more consistent with letting your runners hit, being more consistent with being able to hold your trades for profit. That being said, we only getting better, we only going up, and we just learning. Iron sharpens iron. Let's continue to be great. Let's continue to execute, and let's continue to become the best that we can be. You know what I'm saying? If you guys have any questions, if you guys want to know more, if you guys have any tips, like I have tips, feel free to share them in comments below. Your own opinions, what you guys are working on, what you guys need help with, video ideas, and let me know. Like, comment, subscribe, and I'm out of here, man. Catch you on the next one. Let's be great.